Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to consider the quarterly earnings of the Walmart, the largest retail company in the world, and it's also one of the biggest employer in the world. We are going to look at its quarterly earnings for the third quarter of financial year 2024, for which the report the release was announced yesterday, and immediately afterwards we saw sharp decline in the share price of the Walmart, which is trading almost close to 10 percentage point lower than where it was prior to the earnings release. And even in today's session, it is not really seeing much buying on the lower levels, and I feel that the near term outlook has rather turned bearish, and unless we see consolidation for an extended period of time, at least from the short term perspective, we will need a couple of days of consolidation on the lower levels. Only then we will be able to say that selling is now subsiding, and we can plan for the new trades. But for the time being, we will have to go with the momentum, which is obviously bearish, and we have to see what are the reasons behind this decline, behind this sharp drop, and how we can plan and play this bearish turn in the share price of the Walmart. So for that, we are going to consider the fundamental as well as technical side of the story to see the emerging opportunities for us to exploit. First, we consider the earnings release, which is available on the Walmart's investors relation page. I have opened its presentation as well as its quarterly earnings release. The highlight of the results were rather sounding positive from the company's perspective. It has listed the strong revenue growth of 5.2% with strengths in different verticals of the company. The e-commerce sales were higher 15 percentage point year on year. The EPS stands at 0.17 and adjusted EPS stands at $1.53. So there is this metric which is causing some confusion, but if you are aware of the gap standards and EPS, then you might be able to make better sense of it. But overall, there is not much of an growth, rather there is decline in the EPS for the quarter, and that is also, I think, one of the reasons why we are seeing the stock trading lower, because there was substantial upward momentum, upward run in the last couple of weeks in the stock, and it was trading close to the 52 weeks high when we saw these results. The results were factored in, and some moderation is also a possibility on these high levels. So you can even read it as a correction of sort, and a buy on dip strategy can also be applied. But prior to making our mind, we need to be clear about its fundamentals and technical. So we will be looking at the highlights of the quarterly earnings release first. The revenues haven't really changed much, and if we look at the overall picture, the consolidated revenue stand at US dollar 160.8 billion, which are 5.2 percentage up year on year. The gross margin, the operating margin, has also improved by 32 basis points. As we saw, the operating expenses declined by 182 percentage point, so that has improved its operating margin. The operating income is up by US dollar 3.5 billion. The rate of is at 14.1. E-commerce is seeing substantial pickup. There is strong growth on the e-commerce side. The Walmart has ramped up its online presence and it is competing with other giants like Amazon and quite effectively. Now, if we do this comparison here, you can clearly see in the third quarter of financial year 2023, the revenues were standing at US dollar 152.8. Now these have gone past the US dollar 160 billion mark. The gross profit rate is now standing at 24%. The earning per share, if we look at the earning per share comparison, there is this growth from loss to profit in the gap standard. And if we look at the adjusted revenues are also up by 2 percentage point. The operating income is also seeing positive impact in this year gone by. So on most of these metrics, which are quite important, the company's operations have improved. The revenue is up, the earnings are up, the operating margin is up. So all these things have improved, and so as its share price, it is lot higher than where it was trading at the same time of last year. So that is also a factor which we have to consider when we see why the share price has declined even after posting these earnings report, which is seeing positive developments for the company. So the company is not doing badly as per se, but its valuations have already factored in all these parameters. So that is causing a profit booking of sort on these levels. So if you are an investor, you should be waiting in the wings, and as and when things stabilize, if we see this decline doesn't really extend much, and if there is consolidation on the levels close to US dollar 150 per share, we can indeed go for the new investment decisions in the coming weeks, and that will be an opportunity for us because the forward guidance of the company is also on the upside. The company is expecting its operations to improve, and it is also expecting the net earnings to rise in the fourth quarter of financial year 2024. So all these factors considering all these factors, we have a positive momentum in the company's operations, and also there is positive momentum in the company's share price. So all these things are pointing northward only. Only it is a matter of time when we see it stabilizing and then charting a course higher. We will consider the consolidated income statement as well. Let me go to the statement of income. So here we have condensed consolidated statement of income for the quarter ended October 31st. The revenues are listed here, which are more than 160 billion US dollars. The consolidated net income is around half a million compared to, sorry, not half million, it is half billion. These are numbers in million compared to more than 1.7 billion worth of loss registered in the last quarter, in the same quarter, that is third quarter of financial year 2023. So year on year, there is improvement in the business and its growth is going to be only getting better in the coming quarters. So fundamentally speaking, the company is doing well and it is expecting its growth to be sustained and improvements onwards. Now we turn to the technical side of the story to see if there are emerging opportunities in its valuations. This is a chart for the Walmart. Starting from the year, it started the year close to $140 levels. From there on, it rallied to almost 170. And this is a slow moving stock. Usually, we don't really see much movement in the stock of the Walmart. This is a big company. Its market cap is quite large and it is a slow moving stock. And if we see this trajectory, it has been consistently upward, and any dip could have been utilized to buy the share, and that would have yielded a positive return. Now it is going to be equally interesting to see if this is also going to be such moment or not, because we have this formation of higher highs and higher lows. So unless this deep decline extends past 150 or thereabout, we don't really have many reasons to worry at this turn of events. Rather than that, this can be utilized as an opportunity to invest and go for a long trade. But as I said, we will have to hold our horses first, let it stabilize, and then only we can go for a new trade if you are trading from the medium term to longer term perspective. If you are a short term trader and your time horizon is only of couple of days, then it is better to stick with the bearish momentum, because for next couple of days I'm not really looking at a strong revival from these current levels. Rather than that, as the momentum is likely to remain bearish, it will be better for us from the short term perspective to look for short selling opportunities only. But from the medium term to long term, the things are not that bad. You can see it as a correction, as a newer opportunity, and given this upward trajectory for the company stock, we can still rely on it to deliver us the positive return in the coming weeks, coming months. So for that, we will have to make the trades at such an opportune time where the risk reward ratio is favorable, because no trade can be relied upon totally. There is no 100% assurance, and keeping that in mind, the risk reward ratio needs to be favorable. We have to make sure that the optimization is done so as to ensure that we have the possibility of loss on the lower side, and also the amount of loss which we can suffer needs to be minimized to the extent possible. And then we also have to scale up the profit to make it in multiples of the loss. So overall, even in the case of we being on the wrong side, we will have a positive return in all these bets which we keep taking over and over. So for that, we have to wait for opportune time and get the risk reward ratio also on favorable terms. So that's my outlook looking at the company's quarterly earnings announcement and the share price movement afterwards. That there is not much of a reason to worry. It can be looked at as a correction, profit booking of sort from the higher levels, and this opportunity can also be utilized. But we have to keep the momentum in focus and wait it out for the opportunity to emerge. And for that, we will have to allow it to stabilize first and then go for a newer trade. So if you are a short-term trader, look at its short-term momentum, which is totally bearish. And if you're a medium-term to longer-term trader, then the opportunity is going to come your way also for new buying, new long trades. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day ahead. See you next time around with a equally interesting company to look at. See you on Monday. Thank you all for joining. Goodbye.